Shay Russell for mining.com.au, and I'm once again coming to you from the floor of the Rural Symposium. Now, joining me today is Darren Gordon, and I hope I've been able to fit him in the frame. Darren is the Managing Director of Centaurus Metals, and I've brought Darren on because we're going to talk about nickel.
How exciting.
I know, wow, we had a spicy presentation this morning. Now, I know nickel's not particularly popular at the moment. In fact, it's a little bit like uranium was at the end of Fukushima. But your project's terribly exciting. It's got a lot of things going for it. Let's work through a couple of its strongest selling points. It's low cost, located in Brazil, Tier 1 mining jurisdiction.
Yep.
Maybe I should let you take over because I'm a bit sleep deprived.
Yeah, no, all good. So it's a large nickel sulphide project located in the Carajás mineral province of northern Brazil. We've got nearly 1 million tonnes of contained nickel metal in the resource. We've just completed a feasibility study with the reserve now at about 460,000 tonnes of contained nickel. We've demonstrated low cost. We should be able to compete with the Indonesian market, which I think is critically important. And the Australian market has been carted out a little bit in recent times with the supply that's come on from Indonesia. We needed to demonstrate that we were something different, that we didn't have a cost structure that other Australian listeds in the nickel space might have, and I think we've done that with the fees.
So being able to compete with Indonesia is quite impressive. So what is it that's different about your deposit so you can provide low-cost nickel to the market? Yeah,
look, it's principally driven by the power situation in Brazil. So Brazil's power, 80% renewable, principally hydro, so coming with a very low emissions footprint, but also very low operating costs associated with that. We should be at around about 3.5 cents a kilowatt hour. Average power price across Australia projects might be sort of 15 to 20 cents a kilowatt hour, and so that has massive bearing on what our overall operating cost structure looks like. I think the other side of it is the currency. Like, we've got a lot of our operating costs in local currency, whether it's labour, power, fuel, whatever that's going to be, and being able to bring that back, US dollar terms, we have a nice exchange rate to support us.
Now, we had quite a spicy presentation this morning. There were lots of great questions, actually. People weren't afraid to put you through their paces.
No.
Tell me, what do you think was one of the most important questions that was asked today at the breakfast session that we should be able to tell the rest of the Australian audience?
Oh, look, I think, just where is the market at?
Yes.
And we've really, we sort of touched upon it just then, we need to be able to demonstrate we can compete with Indonesia, but where is that nickel price going to go? How does that impact your project? I think the benefit that we've got is we've got a market cap that's at $220 million, but we've got a project that's nearly $1 billion post-tax MPV. So we've got a fair bit of wriggle room.
Yeah.
So now that we've got the feasibility study out, where's the price sit? Is there any downside? Okay, there's always going to be some downside, but you don't feel like it's massive. If you have a look at where the supply demand situation is right now, we sort of feel like you don't see nickel prices dropping another 20%. It just doesn't feel like that. There's been all of the supply come off Australia. There's been the supply that's come out of New Caledonia.
Yep.
The operating costs in Indonesia are going up themselves, and so that's going to just be a dampener on their supply. And then it's the demand side of things, and trying to get to a situation where the gigafactories that have been earmarked for North America and Europe, that they actually do transpire. And if that's the case, then there is going to need to be more nickel. We've got stats in our presentation that sort of say that out by 2040, you need to find another 80 nickel sulphide projects like Jaguar. Well, sorry, not nickel sulphide, but nickel projects at least like Jaguar. And that's just not going to happen. There's just not that much of it around, and it takes a long time to find these things. So I think the message that we're trying to get across is that Jaguar is quite unique. It's got a low cost profile. There's plenty of headway between where the market cap is and where we think valuation can get to, and that's what we're trying to tell investors that they should be looking at.
Okay, so now the key question every investor wants to know is that what comes in the next 6 months? Now, obviously, investors are an impatient bunch, and
yes,
and you're in a tough market right now, but you're not thinking short term. And I know from my point of view, when I talk to investors, when it comes to nickel, I try to encourage them to look at the overall market cycle and the company cycle of where you're at. But what are you specifically working on with the Jaguar project?
Yeah, look, I think for us the next 6 months is really about funding, and we've been quite clear with the market that we don't want to dilute shareholders, blow up the capital structure to get this project built. We've had a lot of dialogue with the, strategic partners, strategic off-takers over the last 12 months. We're working with Standard Chartered Bank now to run a more formalised process in relation to partnering, and by going down the partnering route, we feel like we can get a better look through on the valuation, getting something closer to NPV type valuations. That will mean that that's going to be highly positive for our shareholders. It's obviously about putting that piece together. If we look at the timetable of what that will be, it should be happening in the next 6 months. And I think with that, getting the last of the environmental approvals, getting the mining lease granted, we're in a position where we can then go and make investment decision in probably April next year.
Listen, you've got an exciting few months ahead, and I just want to say thanks for today's presentation. It was certainly spicy, but also too, I'm really pleased I got a chance to talk to somebody in nickel, because it's tough now, but it won't always be this way.
No, we think the opportunity is huge.
All right, thank you so much for being here. It's great
Thanks,
to have
Jay.
you on.
Good on you.